All right, man, 2026, here we come. 2026, you guys ready? David Delgado here with Freedom Choice Lending. Today, we're going to be talking about if you're thinking about buying a home. This video that we're recording here is really for you. If you're asking this question, should I buy a home in the year of 2026 or should I wait? Right? Hopefully, we can get you some direct answers on this if you pay attention and lean in and take some notes. We're definitely excited for 2026. What we're hearing about, what the market's going. There's a lot of things going on in the market, a lot of things, and people technically don't buy homes when there's a lot of uncertainty, right? When things are uncertain, people tend not to make moves. They tend to stay put. And, a lot of times what we're looking at is the question is like, man, should I buy today or should I wait? Right. That's a really good question that you should ask yourself. And, people ask me that question all the time. And, you know, I don't know if there's a right answer for that, to be quite honest with you. Like, is there always the right time? And I think that's really depends on people's situations. And I do know this, that if they don't feel comfortable, people don't buy homes when there's uncertainty going on, whether it's in their personal life or when when worldly things are taking place that bring uncertainty. A lot of times people put those things on hold, but as a matter of fact, people would be like, is that the right time to buy? And back in COVID, I was getting the phone calls left and right. Hey, should we buy a home or not? Well, inflation. I know in my market where we're shooting this video, it's in Whittier, California, and home prices went up about $100,000 like overnight. So no one was expecting that. But I did a little history. I did a little research on history. A lot of times when there's events like COVID and wars, it almost makes a good time to buy, even though it's a uncertainty for people. But what starts to happen is rates start to drop. And that's what we're experiencing right now. Rates have been dropping. Last year rates were 7%, and the year before that, up and down, they dropped down to 6, then went back to 7, 8%. So if you look at the last 2 years, rates have continuous to drop. So if you own a house and you have a rate that's more than 6%, or maybe there's lots of equity in there, you may want to take a look at, maybe is it now the time to refinance, to pay some credit card debt off, or even lower that interest rate to save you some money off your monthly payments. But I believe that 2026 is going to be your year. If it's your year, if it's your goal, it's your heart's desires to buy a home, then might as well make it your year, right? This is a year to maybe expand, right? Grow. That means if you're maybe a homeowner thinking about buying another home, maybe you want to buy a second home, or if you're renting right now and you want to buy your own home. I believe it's going to be a good year for a lot of folks here. Kind of like the same thing that happened with people that bought homes during COVID. A lot of people didn't even want to go outside the house, but let alone there's people racing around town buying homes that caused inflation, and they got rates as low as like 3%. Now, people ask, like, are rates going to go that low in the near future? It's very hard to say yes, because that was an incident that happened that, it was an incident that caused those lower interest rates because of COVID. And our U.S. government were buying treasuries and buying mortgage-backed securities. That's put a lot of liquidity in the market that caused the rates to decrease. And they don't do that very often. They don't do that very often. And I'm talking like very often. They don't really do that. So that's what caused those rates to go low. And I don't think that the rates are going to go that low, at least in my lifetime, because that only happened one time in the history of the United States that I can go back and look at. So given that, if I just look at the history of things, I don't think, based on history, rates are going to go down that low. I do think that, based on what the feds are talking about, what Fannie Mae, Freddie Mac are talking about, I do believe that, the rates are going to get down to about 5% or so. And we're seeing that already. Okay. So I don't think it's in their best interest to get rates below that. It causes a lot of things, a lot of issues in the market, and we're paying for it right now, right? Causes a lot of inflation. And so, it's probably in their best interest not to get those rates that low, because we're trying to get out of inflation, whether you like the current administration or not. But that's the whole thing about the tariff, is trying to get the economy out of inflation, and it takes time to do all that stuff. So we'll see what happens on that part. But here's what I do know, that what's happening in the mortgage market and real estate is right now we're seeing a low side of inventory. Okay. And there's a few things that are causing that low side of inventory. And I'm going to just talk about the biggest issue that's causing the lower inventory, not all the other issues, but there's other issues that are causing the low inventory. But the bigger issue is that, when we dropped, or, the government dropped those rates down to 2-3%, that roughly estimated about 20-30% of the market that people refinance into those loans. So, and then there's a lot of houses that are paid off and free and clear, on average about 30% in Orange County, LA County. So it depends on your area. So that's a lot of homes that are really off the market. They're not going to get put on the market, right? Those homes that have been paid off, they're being passed on from generation to generation right now. We're seeing a lot of transfers that way. But if you're buying a home, if you bought a home in the past during COVID times, or refinanced during those time frames, then those loans are actually locked up. So that's what they call locked up inventory. And that means those people, homeowners, are not putting those houses on the market, right? So we're taking away homes that could be on the market, but people are choosing not to put them on the market. And there's a lot of other areas that are reasons why we have low inventory, but those are the biggest reasons. The low interest rates a few years back is causing a lot of the low inventory today. So if you think about it like this, so rates, let's say 30% of the market, you got low rates, right? 3%, whatever. And then you have this rates that were at 7%, while those people that are at 3% loans, they're like, I'm not going to sell my house and go buy another house. My payment's going to go up, even if I buy a smaller home, because of the interest rate, right? I'm going to get is 7%. Well, the closer the rates get to that 2-3%, like the closer that the current market drops, which we're seeing right now, then the people that are in these lower rates, they're going to feel a little bit more compelled to sell their home now, right? Because the rate is more in line with what they currently have. And so if it makes sense for them, I think we're going to get a little bit more inventory on the market, which is good for you home buyers out there. But it's all about preparing for homeownership, right? These are things that maybe you're not even thought about, but you might be just learning for the very first time about supply and demand. But once you start actually getting very active in the market, and you start really shopping around and start seeing things, and the real estate agent starts telling you like, hey, well, that's all we have. We only have 4 homes on the market in our area that you want to look at. Well, that's because of the low demand. Keep in mind, though, that price is always a function of supply and demand, right? So when demand is high, you're going to pay more for your home, right? So higher demand in the market, that means more buyers are coming in the market. It's going to cause home prices to go up, right? What drives that is the economy, the world economics, people's payroll, their income, the supply and demand on properties, interest rates, right? There's a lot of factors. So that's why, when people ask, well, when's the best time to buy? It's always like, well, it depends on you, meaning like, are you planning on staying in the home for a long period of time? Because if it's more than 5, 10, 15, 20 years, this is a home that you want to buy for the long term for you, or maybe your family, or you and the family, or you and maybe something that you want to pass on, that's you want to hold on to, right, for many, many years. Well, if you look at real estate, I'll just give you an example. We'll just use my mom, for example. When they bought their home, it was a long time ago, right? 50 years ago. Other homes They bought it for $75,000. I don't know, somewhere around that price range. But think about that, $75,000 that they bought because they planned on keeping it for a long periods of time. Now that home is probably worth, $1 million, right? So think about that. As home prices are going up, it's all relative to the market, right? I'm sure back 50 years ago, $75,000 was a lot of money to buy a home. I was working on another a client's loans recently, and it was out in Newport Beach, and they bought that home, 50 years ago as well, and that home was worth 125,000, and now that home is worth about 1.5 to $2 million. So at that time though, it was $125,000 was a lot of money for the family, but they said, you know what, they prepared for it. They put a strategy together, and they started thinking long term, right? And in order to expand and grow, we always have to think long term. That means, we're thinking down the road, not so much today. Even though today it might be a little tough on the wallet, right? On the bank account. It's like, oh man, my mortgage payment is going to be, X dollars, and I'm only paying right now this amount of rent, and I'm tired of paying a rent. Well, it's going to take feeling a little uncomfortable for a while. I'm sure the people that bought these homes 30 years ago, 50 years ago, it was a little uncomfortable paying that mortgage, even though it was, probably just a few $100s a month, right? And today we're like a few $100s a month. I would do that. Well, times are different. Income's different, right? People, the way they make money is different. So it's all relative to today's market. So what I always say is like, sometimes just don't overthink it too much, set a budget. And we have a ultimate home buyers guide that we can mail out to you. And it's going to walk you through all the steps of buying a home. And on top of that, we got this amazing worksheet that we give for you for free. No cost, no obligation. You don't have to pay for postage. So we'll send it out to you for free. And that's a very good guide that's going to help you plan and put a strategy together. So that way you can have some long-term success when you're planning, and you have a really good clarity. Clarity is really important when you're buying a home, right? Clarity of your goal, how you're going to achieve it, but how you're going to get there. And that's what this guy is going to help you do in 2026. So if that's something that you would like, just call me at the office. Phone number is 866-587-6927. Or visit our website at freedomchoicelending.com. Or at the bottom of this, there's more information that you can get access to. But I would say that buying a home is everyone's has different personality, different personalities, right? Different stages of where people are at. But keep in mind that there's an old saying in this business, in the real estate business, realtors use this term all the time. Hey, you're going to marry the home then, right? You're going to marry it, meaning this is a long-term strategy. But you're going to date the loan. You're going to date the interest rate, meaning that is not going to be a permanent fix. But however, when you do buy a home, are you buying it because you're just tired of the landlord increasing your rent payment, right? Well, that might be a very good reason. Or maybe you're just outgrowing it, and now it's just time to make that move. Well, because you're buying the home for long term, sometimes as rates drop over time, you're going to be able to tap into that equity, maybe, right? More than anything, I think it's a more secured investment than renting, because the landlord, I've owned real estate before. I own real estate now. And the person that benefits as a landlord is the landlord, right? Because when the landlord makes that mortgage payment, they're paying down principal and interest, equity's going up. The landlord that gives us the money, well, what happens to that for the tenant? So the tenant pays the landlord money. What did they get out of it? I get it, a place to stay. Sometimes that's important for people, but there's no long-term wealth, right? That thing's getting increased over time. And if you just do the simple math, as you're watching this video, it's like, what are you paying for rent right now? Is it $2,000, $1,500, $1,000, $3,000, $4,000, $5,000, whatever that amount is, and multiply that number by, let's say, 12 months, and then do another calculation and multiply it over 5 years. And you're going to be amazed on how much money that, if you don't buy a home, how much money that you're going to give to the landlord so they can actually create wealth and not the tenant, right? And sometimes that little exercise puts things in perspective to start thinking more long-term thinking. And that's really what homeownership is all about. It is a long-term strategy. It should not be short-term unless you're like the investor. The investor will buy a property, and we need investors out there because they provide housing. I'm just not a big proponent for corporate investors, right? Corporate investors, these are corporations that are on Wall Street that buy real estate and hold those properties a lot of times or sell them for a profit. They're part of the problem why we have a shortage of inventory as well. I think the only ones that should buy homes are, number one, home buyers, right? That means you're going to live in the home. And then, if you've got enough money, maybe you might need a second home in here and there, but it's part of you. You're building wealth. It's you. And then also some investors. We need the mom and pop investors, right? They do this to make a living, and as well as they're providing housing for people that need the housing, right? So I like those three areas on why people should buy homes. So whether you're a first-time buyer, or maybe just buying a second home, right? Vacation home, or maybe you're that mom and pop investor or this might be your first investment or second or third, and you're not just doing it for yourself, but you're also really doing it for somebody else too, right? So I believe in those types of things. But the people that are actually doing these things today and in the past, these are buyers that just get rewarded for preparing early on, right? It's always preparation. I always believe in preparations always meet opportunity, right? So we do a very good mortgage plan call where we go prices, monthly payments. We build a very clear plan for you. So that way, you don't have any surprises. We answer all your questions. We go over the different types of loan programs and make sure that you got a very clear plan. And we do these things free of charge, no obligation. We're not here to pressure you to buy. There's no such thing as pressure to buy. We're just here to answer all your questions and help the best way we possibly can. So if you like to set up a mortgage plan call, just give us a call at the office. Phone number is 866-587-6927, and we'll set up that mortgage plan. We'll go over prices, monthly payments, go over all the various closing costs. And it's a very good tool for you to have. That way, as you start to plan homeownership, whether it be in 2026, maybe in 6 months or beyond that, but at least you got a very good plan put into place, and you can work that plan. So when the timing is right for you, you're going to be doing what you should be doing with confidence. You're going to leverage, all the preparation that you did, which will give you peace of mind. So if you have any questions with all this, feel free to reach out to us at the office. Thank you so much for watching, and come back soon. Hey, and if you like this information, please subscribe to our YouTube video below or post a comment, whether it be good or bad, and I'd love to get back to you as quick as possible. Again, thanks a lot for watching. Have a great day. Bye-bye.